So let's talk about the annual spending of money. This is how most people spend their money. Most people, out of every dollar they make, they spend 20 cents of every single dollar on automobiles, the payments, the gas, the upkeep. Then they spend 30 cents of every single dollar on housing. Okay. And then 40 cents of every single dollar goes to everything else: diapers, travel, entertainment, food. So out of a dollar, 90 cents of that dollar goes to someone else, and 10% goes to you for your savings. As of about 18 months ago, the average savings rate was between 5 and 6%, 5 or 6 cents of every dollar, not 10 cents like I just showed you. And prior to the recession, the Great Recession, the savings numbers were actually negative. Most financial advisors talk to you about how much money are you saving today, or how much risk do you want to take to make more money. Well, if you can't save more and you don't want to take more risk, what options do you have? How much risk do you really want to take on your money? Think about this. I'm just telling you exactly what's going on out there, folks. And I'm not going to talk to you today about how much money you're saving. I'd rather talk to you about how much money you're spending, because I'd rather take some of the money you're spending and show you how to build wealth by simply taking back the money that you're giving away, the money that you're losing control of, and the money that everybody else is taking from you. If you want to build wealth, start with looking at where all your money goes, and let's find a way to take back that money. And let me show you what that would look like. Now let's look at what would happen if we moved all of the interest that you're paying to everybody else into your savings. Now, on average, we talked about that 20 cents of every dollar that goes to automobiles. What if I showed you how you can take back the interest that you're giving to all the banks and the automobile finance companies? Well, if I could show you how to do that, you then would be able to take back 5 cents of every single dollar, which now means we just added 5 cents to your savings, which effectively means we just increased your savings by 50%. And all we did is took back just the interest that you're giving away to everybody else for the cars that you're buying. And today, I already told you, I'm going to show you how to get back all the money for every single car that you ever buy, drive, and own by applying this one step in your lives. But now let's talk about the bigger one. Let's talk about your housing. Let's talk about the housing and the interest that you're paying on the mortgage. Now, we just did the car, but let's really go into the 30 cents of every dollar you're giving away on the housing. Out of that 30 cents, 25 cents of that 30 is going to interest. Don't believe me? Great. Why don't you look at the mortgage statement? For any of you that have a mortgage, take a look at your mortgage statement and look at, on that mortgage statement, how much money is going to interest and how much money is going to principal. Well, if your mortgage is about 7 years old, in the first 7 years of almost all mortgages, you are giving away 80 to 85% of every single payment you make on your mortgage to interest. You see, this is what the banks know. The banks understand the velocity of money. So the banks have figured out how to get the most amount of money from you in the first 7 years. Do you know why? Because the banks also figured out that every 5 to 7 years we move, or every 5 to 7 years we refinance our original mortgage, which means we reset the clock, which means the bank then gets to make 80 to 85 cents or 80 to 85% of every mortgage payment goes directly to interest. The bank is winning. Even though your interest rate is low, if the bank came out with a loan savings or a loan sale and they put it up, mortgages, 30-year mortgages, 1.5%, there'd be a line a mile down the street, maybe 2 miles. But you see, the bank would be laughing the whole time because the bank knows that for every mortgage they write, they're getting all the interest up front in the first 7 years. And I guarantee you, every person that watches this video, if you really think about that and you think about how often you've moved or how often you've refinanced your house, most all of you have fallen right into that 7-year statistic. See, the banks are so smart. They did the research on this and they figured that out. And what they did is they found out how to capitalize. So if all we did is we moved that 25 cents of every dollar you're giving to the bank into your savings, because we found a way to take back that interest that you're giving away, you just increased your savings huge. But now let's go to the next one. The next one is everything else. the food, the entertainment. I bet you some of you are using credit cards. And I know we always have the best intentions to pay those credit cards off, but we don't always get around to it. So even though you want to pay the credit card off, some of that money is going to interest. So let's just say we found a way to pay that credit card off every single month, and we didn't have to give that 5 cents away to everybody else. We were able to keep that 5 cents in our savings. Now, this is what your savings would look like. How do you guys like the way that looks? Because I'll tell you what, that looks a heck of a lot better than the prior example, because now all the money that you were giving away, the interest you were giving away, is now going to you in your savings. So this is how you build wealth. You take back the money that you're giving away to everybody else, but you can't do that until you learn how to take back control of your money.